How's it going, everyone? Welcome to another episode of Investing Kev. In today's video, I'm going to do something different. I'm not going to do a stock analysis breakdown, but I'm going to do a video where if I had a hypothetical $1,000 to start a growth stock centered portfolio, what stocks would I buy? There are many new investors entering the market thanks to mobile apps that have made investing easier, alongside social media providing a limitless flow of information where people can access this info in a matter of seconds on many different platforms. There's no doubt the stock market is very hot right now. Things are overvalued. There's consistent talks about a pending stock market crash, but no matter what, we stay invested. As a disclosure, this is not investment advice. This is just for entertainment only, so always do your due diligence and speak with a professional if you need to. If you like this content, please like the video and consider subscribing. It would mean so much to me. I release a stock breakdown video pretty much every week and want to share as much knowledge as I can so people can be objective and navigate the stock market through the good times and the bad times. This channel is growing and I'm very thankful for all of you for swinging by and tuning in. I am also on Twitter, so feel free to follow me, and if you want to discuss stocks, I am active on Twitter and would love to hear your point of views and just chat about investing. I also have a link to my investing portfolio. I am currently investing in 4 different investing strategies and we'll see how each one performs over time. In one portfolio, I'm invested in an ETF that tracks the S&P 500. In another portfolio, I'm invested in growth stocks. Another is just focused on stocks that pay dividends. And the last one is a mix between growth stocks and dividend stocks. I am holding on to these stocks for at least a year to see how they do and will evaluate them in June 2022. My spreadsheet has watch lists where you can find a really huge list of dividend or growth stocks that might interest you, as well as a type summary of video breakdowns I've done. For example, if you want to learn about Teladoc after this video and its potential in a massive telehealth industry, you can watch the YouTube video or read up on the quick type up. Alright, with all that being said, let's get started. This portfolio is based on $1,000 split between 10 stocks, but those numbers can be whatever you want it to be. It doesn't matter if you have $10,000, $100, $500 split between 2 stocks, 5 stocks, or 10 stocks. What matters to me is being invested, having your foot in the door, and as many smart people say that time in the market always beats time in the market. We don't know the future. The stock market could crash next month, but if you have conviction in your stock holdings, you invest in companies with solid revenues that are major leaders in their industries, have strong management, and you dollar cost average through the good times and the bad times, it's historically time and time again been shown as a winning strategy. I could have chosen 5 stocks, but I decided to go with 10 because these are companies that I believe have a bright future. I would highly encourage all of you to find a consistent investment schedule, whether it's weekly, bi-weekly, or monthly. The great thing about investing is that opportunities are there in different segments all the time. For example, if Apple were heavily discounted months from now, you can use the money that you deposit just to go into Apple. You don't need to consistently invest in every single stock in your portfolio. Sure, it makes it easy, but there's so much flexibility and you need to decide what's best for you. The 10 stocks I have in here are in different sectors, whether it's in e-commerce, automobiles, healthcare, or sports betting. These are stocks that are either leaders or one of the top leaders in their industry. They're evolving, growing in industries that are going to or continue to dominate the future. I'm going to provide a quick summary of why I would invest in each one, but as always, there's always going to be a risk involved in any investment and you need to do your due diligence. The great thing with investing nowadays is that a lot of these brokerages offer you fractional shares, so you don't need to save up hundreds of dollars just to buy one stock. You can contribute whatever amount and build up that position over time. The first stock is Alibaba, ticker BABA. Alibaba is one of the largest e-commerce companies in the world based in China. They are considered the Amazon of China, and their entire ecosystem has over 1 billion users, which is crazy to think about. They primarily operate on e-commerce thanks to Tmall and Taobao, but they're also in cloud computing, food delivery, video platforms, and other sectors. They have Fresh Hippo, which is a grocery market chain. They have cloud computing in Alibaba Cloud, and their international commerce retail has AliExpress. Looking at this Statista line graph, this is the amount of e-commerce users in China from 2017 to 2025. In 2021, they will have 987.5 million users, and by 2025, they will have 1.2 billion people. This is a massive industry already and will grow to being even bigger down the road. Alibaba is positioned to continue its success domestically and globally. Looking at tip ranks, 24 analysts have given a 12-month price target of $290, which is almost a 41% upside from its current price. The next stock is Advanced Micro Devices, ticker AMD. Advanced Micro Devices is a semiconductor chip manufacturer powering products such as gaming systems, computers, graphic cards, and many more. They have a robust portfolio with a bright future. Looking at their 2021 Q1 financials report, They have the AMD Ryzen, which is the world's fastest gaming, productivity, and content creation processors. They handle gaming and commercial notebooks, and they power game consoles such as the Xbox One and PlayStation 5. Looking at the financial summary of their Q1 2021, they had record revenues of $3.45 billion, up 93% year over year and 6% quarter over quarter. They had operating cash flows of $898 million and a record free cash flow of $832 million. And looking at this article, the IDC, also the International Data Corporation, forecasts the semiconductor market will grow by 12.5% year over year to $522 billion in 2021, driven by continued robust growth in consumer, computing, 5G, and automotive semiconductors. Semiconductors play a huge role in our daily lives, from our mobile phones to our laptops, desktops, gaming systems, cars, and other appliances. I believe AMD has a bright future for many decades to come. Looking at tip ranks, 20 analysts have given their 12-month price target, with an average of $108.81, which is roughly 18% upside from its current price of $92.15. The next stock is Apple, ticker AAPL. Apple is a household brand name, and they have a huge following. People will always want the newest iPhone, iPad, MacBook, and other products. What intrigues me about Apple is their focus on the entertainment side of things, building up their Apple TV, with hit series such as Ted Lasso, which has been nominated for 20 Emmys. And also, the much anticipated Apple EV car seems to be rolling along. This idea has been thought of since 2014, but it seems like Apple will finally be entering the automotive industry in the coming years. And looking at their 12-month price target, 26 analysts have given an average price target of $159.42, which is currently a 7.3% upside from its current price of $148.56. The next stock is Disney, ticker DIS. Disney was hit hard by COVID because they had to shut down all their theme parks around the world. Disney was pushed to roll out their Disney Plus app, and that was a huge hit with huge releases such as Mandalorian, WandaVision, and Loki. Disney's theme parks have reopened recently around the world, and eventually their cruises will be back in operation. When one looks at Disney, you have to look beyond the parks. Disney has many different forms of media, such as ESPN, which is the worldwide leader in sports entertainment. They have Hulu, and they have the rights to Marvel Studios, Lucasfilms, and Pixar, alongside 20th Century Studios. I believe that the Marvel Cinematic Universe will do well as it's rolling out Phase 4. Star Wars will continue to do well, and their usual Disney and Pixar movies always do well. Looking at their 12-month price target, 20 analysts have given an average price target of $210, which is roughly 20% upside from its current price of $176. The next stock is DraftKings, ticker DKNG. DraftKings is in a very young industry in the sports betting world. As states legalize sports betting, DraftKings will have a great chance to saturate more market share. There are estimations that the sports betting industry will be around $9.25 billion by 2025. DraftKings is currently the #1 rated sports betting app, and in Q1 of 2021, they reported 1.5 million users, up from 720,000 people. Their first quarter results showed $312 million in revenues, which is a 175% year-over-year growth. If you want to learn more about DraftKings, check out my stock breakdown and analysis video. Looking at tip ranks, 19 analysts have given their price target of an average of $66.18, which is currently around a 34% upside from its current price of $49.33. The next stock is JD.com, ticker JD. JD is another massive e-commerce company based in China. They are Alibaba's competitor, and they currently serve 99% of the Chinese population with the ability to deliver 90% of their packages within the same day or next day. What differentiates JD from a lot of e-commerce companies is that they have their own logistics network and inventory. From start to finish, everything is contained within their ecosystem, from ordering to delivery, and that has resonated among their customers as they're able to serve nearly everywhere in China with a focus on authenticity. JD currently has 500 million active users, and looking at this article, by 2024, retail e-commerce sales in China will be about $3.5 trillion. In the first time ever, in 2021, retail e-commerce will make up more than 50% of retail sales in China. Looking at tip ranks, 11 analysts have given an average price target of $98.73, which is a 36.5% upside from its current price of about $72.29. The next stock is Microsoft, ticker MSFT. Microsoft is a household name just like Apple. When I think of Microsoft, I think of their office suites, such as Microsoft Word, Excel, and PowerPoint, which in my opinion is always going to be used by universities and workplaces. They have their Surface laptops, They have their Xbox One, and they also focus on cloud services with Microsoft Azure being a massive revenue generator for them. Looking at this fiscal year 2021 Q3 results, Microsoft had revenues of $41.7 billion, an increase of 19%. Their operating income was $17 billion, and that increased by 31%. And looking at this press release, they said that the Microsoft Cloud, with its end-to-end solutions, continues to provide compelling value to our customers, generating $17.7 billion in commercial cloud revenue, up 33% year over year. Microsoft is a powerhouse technology company, and just like Apple, I believe these companies will be here 10 to 15 to 20 years down the road. 25 analysts have given an average price target of $307.57, which would be a 6% upside from its current price of $289. This upside of 6% might not seem like a lot, but Microsoft continues to grow and will continue to be one of the leaders at the forefront of technology wherever that future takes us. The next stock is NIO, ticker NIO. NIO is a Chinese electric vehicle company that's looking to become a dominant leader in the electric vehicle space. They have a solid lineup of vehicles, and they're currently expanding in Europe, starting off in Norway and soon to be Germany and Amsterdam. What I like about NIO is that their revenues are going up year over year, their deliveries continue to go up quarter over quarter, year over year, and they have a vision for global expansion. I also like that NIO focuses beyond just their cars. Their cars are great, but NIO is focusing on lifestyle through their NIO houses. They also focus on strong customer service, and their battery swapping stations definitely make them stand out compared to most competitors out there. The world is heading towards a renewable energy future. One of the biggest ways to reduce carbon emissions is focusing on transportation. By reducing internal combustion engines, you can see that China, Europe, and US will be increasing their yearly EV sales from 2019 to 2022. Looking at tip ranks, 9 analysts have given an average price target of $64.22, which is a 46% upside from its current price of $44. The next stock is SoFi Technologies, ticker SOFI. SoFi is a disruptor in the financial tech industry. SoFi aims to be a one-stop shop when it comes to the entire financial services portfolio. They offer a savings account, loans, refinancing, investing, and a credit card. SoFi is currently applying for a bank charter, which means they'd operate their own bank instead of having an outside bank handle their assets, which allows them to lend and deposit much quicker. SoFi's projected revenues look great, and with finances always going to be a major topic, consolidating everything into a single application makes it easy and empowers people to manage their finances in one centralized location, which is one of the biggest complaints from users is having multiple accounts scattered everywhere. Looking at tip ranks, SoFi only has 2 analysts that have given a 12-month price target. The average price target would be $27.50, which would be 75% upside from its current price of $15.70. And our last stock is Teladoc Health, ticker TDOC. Teladoc was a winner during last year's stock market, hitting highs of $300 before trending downwards. Their long-term projections are nice because they're the world's largest telehealth provider currently. Teladoc acquired Livongo, which is a personalized health tracking app, and they also own BetterHelp, which is the world's largest network of therapists, serving nearly 2 million people. What I like about Teladoc is their future in telehealth. I believe telehealth is here to stay, and it's not just a product of the COVID-19 environment. Analysts predict that the telehealth industry can be $250 billion. Looking at tip ranks, 21 analysts have given an average 12-month price target of $229.20, which is a 51% upside from its current price of nearly $152. And there you have it. These are the 10 stocks I would invest in if I were given $1,000 to start a growth portfolio. These companies, I believe, have a bright future in continuing their dominance or disrupting the industry they're in. I will have a link to my spreadsheet in the description below if you want to take a look at this portfolio tab. And if you want to learn more about 5 of those companies, I did a breakdown on SoFi, DraftKings, NIO, Teladoc, and JD.com. Feel free to check those videos out to get a better understanding of these companies. If you like this video, please give a thumbs up, let me know what you think in the comments below, and hit the subscribe button. I would love to hear if you agree with this portfolio or what you would have done differently in terms of the stocks chosen or the amount of stocks you'd have. As always, stay safe and I'll see you all next time.